If you are transferring money from your LLC's business checking account straight to your personal account whenever you need to buy groceries, pay your rent, or buy a coffee, stop. You are making the single most dangerous financial mistake in entrepreneurship. By treating your LLC's bank account like a personal piggy bank, you are doing something the legal system calls piercing the corporate veil. When you mix your personal and business expenses, you tell the courts that your LLC is just a shell. And if you ever get sued, a judge can easily strip away your personal liability protection, meaning your personal home, savings, and investments are suddenly up for grabs. In 2026, paying yourself isn't as simple as writing a standard check or giving yourself a traditional paycheck. If you do it wrong, the IRS will destroy you with self-employment tax penalties, and their brand new AI-driven pass-through auditing systems are actively looking for these exact red flags. In this video, I'm going to give you the ultimate beginner's guide on how to pay yourself from your LLC in 2026. We are going to go over the exact legal mechanics of owner's draws, unravel the 15.3% self-employment tax trap, and look at the advanced S-Corp salary structures that can save you thousands of dollars this year. To understand how to get paid, we first have to bust a massive myth. The LLC itself does not pay federal taxes. When you register a standard single-member LLC, the IRS treats you as a disregarded entity. That means they completely ignore the LLC structure for tax purposes and treat you exactly like a sole proprietor. Your business profits pass through to your personal tax return and are reported on your Schedule C. This means two things. First, you are not legally an employee of your business. You cannot write yourself a W-2 paycheck with federal and state taxes withheld. Second, the IRS taxes you on your net business profit, which is your revenue minus your deductible business expenses, regardless of whether you leave that money sitting in your business checking account or transfer it to your personal wallet. Even if you don't take a single dollar out of the business, you still owe taxes on every penny of profit your business made at the end of the year. This pass-through structure brings us to the biggest financial shock for new entrepreneurs, the self-employment tax. When you are an employee at a standard W-2 job, you pay 7.65% of your paycheck towards Social Security and Medicare, and your employer pays the other 7.65%. But when you run your own LLC, you are both the employee and the employer. That means the IRS hits you with the full 15.3% tax rate on 100% of your net business profit. And for 2026, the math gets even heavier. The Social Security wage base limit has climbed to $184,500. That means every dollar of profit you make up to that limit is subject to the full 12.4% Social Security portion of the tax. If your LLC nets $100,000 in profit, you are automatically on the hook for roughly $15,300 in self-employment tax alone. And that is before your standard federal and state income taxes are even calculated. If you don't plan for this, you'll face a massive tax bill in April. So if you can't write yourself a W-2 paycheck, how do you actually transfer your hard-earned money out of your business checking account? The legal mechanism is called an owner's draw. Because you are drawing from your own business equity, the process is incredibly simple. First, you execute an online bank transfer from your business checking account directly to your personal checking account, or write yourself a physical check from your business. Second, in your accounting software like QuickBooks, Xero, or Wave, you categorize this transfer under an equity account called owner's draw or partner's distribution. Crucially, because there is no automatic tax withholding on an owner's draw, you must set aside roughly 30% of every dollar your business makes into a separate tax savings account. You then use these funds to pay quarterly estimated tax payments using Form 1040-ES. If you skip this step, the IRS will hit you with underpayment penalties and interest when you go to file your taxes. Now, once your LLC starts making real money, you don't have to sit back and pay that 15.3% self-employment tax on everything. You can choose to optimize. You do this by filing Form 2553 with the IRS, electing to tax your LLC as an S-corporation. An S-corp isn't a new legal entity, it's simply a tax status. Under an S-corp, the way you pay yourself completely changes. You are split into two distinct roles. You become an employee of your company, and you remain a shareholder. First, as an employee, you must run official payroll and pay yourself a regular W-2 wage. FICA and income taxes are automatically withheld from this paycheck. Second, as a shareholder, any profits left over after paying your salary and business expenses can be distributed to you as shareholder distributions. Here is the absolute goldmine of the S-Corp. While your W-2 salary is subject to payroll taxes, your shareholder distributions are completely exempt from that 15.3% self-employment tax. You only pay regular income tax on the distributions. By shifting a portion of your income from salary to distributions, you legally bypass thousands of dollars in taxes. Now, you might be thinking, awesome, I'll just pay myself a $1 salary and take the rest of my $90,000 as tax-free distributions. Don't do that. The IRS is fully aware of this loop, and they require S-Corp owners to pay themselves a reasonable salary for the actual work they perform before taking any distributions. If your salary is artificially low, the IRS can audit you, reclassify all of your distributions as wages, and charge you back taxes, interest, and severe penalties. And in 2026, the IRS's dedicated Pass-Through Field Operations Unit is using advanced AI tools specifically to flag S-Corp owners with disproportionately low salaries. So, how do you define reasonable? The IRS looks at multiple factors: your training, experience, and the hours you devote to the business. What comparable businesses in your geographic area pay non-owner employees for the exact same job? Your business's total gross and net income. Many CPAs use a loose guide like the 60-40 rule, where 60% of your profit is allocated to salary and 40% to distributions. But your salary must be legally defensible. Always use real market data from sites like the Bureau of Labor Statistics, or consult a CPA to document why your salary is reasonable. While an S-Corp sounds amazing, it is not free. Setting one up means you must pay for professional payroll software like Gusto or QuickBooks Payroll, pay extra state unemployment taxes, and file a separate corporate tax return, Form 1120-S. This administrative overhead typically costs between $1,500 and $3,000 a year. Because of these extra costs, transitioning to an S-Corp too early will actually cost you more than you save. The general rule of thumb for 2026 is that an S-Corp election only makes sense once your LLC is consistently generating at least $80,000 in net, clear annual profit. For example, if your LLC nets $150,000, you could pay yourself a reasonable salary of $80,000. The remaining $70,000 is taken as a distribution. On that $70,000, you save 15.3% in self-employment tax, instantly keeping over $10,000 in your pocket, which easily covers the administrative costs. To wrap it up, if you are a beginner, start with a clean owner's draw. Keep your bank accounts strictly separated, track your bookkeeper ledgers, and save 30% of your profit for your quarterly estimated taxes. Once your business scales past that $80,000 net profit threshold, sit down with a CPA to discuss transitioning to an S-Corp structure to start saving thousands. If you want to look at the exact numbers side by side, I have a tax planning calculator sheet that models your exact savings under both default LLC and S-Corp rules for 2026. Drop a comment below with the word calculator and I'll send it straight to you. Make sure to hit that subscribe button for weekly, clear-cut financial roadmaps, and I will see you in the next video.